Hi everyone, welcome to today's video. So in today's video, I'm going to decode what three prominent personalities have spoken about the economics, technology, finance and stock markets. First, I'm going to decode the latest commentary given by Mr. Micheal Burry. He's a prominent investor. He decodes the macroeconomic space. So he has given some very important updates regarding the stock market. I'm going to help you understand that. Second key point, I'm going to speak about the latest paper that has been published by Dr. Rajan, and he has spoken about India's K-shaped recovery. So what does that mean for India and the Indian stock markets? Third and finally, I'm going to talk about an interview that Mr. Satya Nadella has given. He was recently in India and he spoke a lot about the future of tech and why tech stocks have corrected. So these are three prominent pieces that I'm going to discuss on today's video. If you do like these type of videos, do consider pressing the like button. It would help the YouTube algorithm and show this video to more people and make them more financially aware. Now I know that you have not pressed the like button, please do it and let's kickstart the video. Okay, so point number one. So who is Mr. Micheal Burry? So he is a hedge fund legendary investor. He predicted the 2008 crisis and he's considered to be a legend in the investing circles. He usually speaks negatively about the stock market and from time to time we need to update our decisions as to what he is saying. So he is saying that inflation has peaked. Now this is actually a good sign because there has been so much negative commentary, including Mr. Micheal Burry. He also gave a lot of negative commentary on inflation and he himself is saying that, you know what, see boss, inflation has peaked. So at least inflationary concerns you can be cool about. Okay, then what he says, so he introduces a but, and whenever there is a but, there is something negative that is about to hit us. Okay, so but it is not the last peak of this cycle. Okay, we are likely to see CPI or consumer price inflation lower, possibly negative in the second half of 2023, and the US in recession by any definition. Fed will cut and government will stimulate. This is such an important tweet. This is one of the most important tweets that he has made all throughout the year because a negative person is turning somewhat moderate. Now, many of you might not have completely grasped this commentary. And let me speak about the 1970 scenario because in 1970, there was a lot of macroeconomic issues. The US was going through a war. There was high inflation all across the globe, including in the US. And the general macroeconomic sentiment was very, very negative. Something very similar is happening now that, hey, Russia-Ukraine crisis, bunch of other different crises. Inflation has peaked over the last 1.5 decades. So economists and stock market gurus say that a 1970 situation very akin to 2020 like situation. Therefore, it becomes very important for us to understand what happened in the 1970s and is something similar happen in 2020 and can we use that information to make money? The answer is 100% yes if you just take a look at this chart. Okay, so here is very interesting study that was done during the period 1970. So I'm showing you data from 1966 all the way to 1994, right? So we will study the decade 1970s to 1980s. Just to set a very quick context that in 1970s, situation was really, really bad. The way it is bad now as per everyone. So inflation was very high, the economy was in recession, US was going to a war in Vietnam, President Nixon had abandoned the gold standard, government had done a lot of money printing. So a lot of negative stuff was happening in the economy, very similar to how it is happening now. So let's understand the playbook. So this black line indicates the rate at which money printing or increasing in liquidity happened in the economy. And this red line indicates the inflation. Now, what is the meaning of inflation? Inflation simply means the rate at which prices of goods and commodities goes up in a particular economy. So take a look at this period that this was December of 1971. The inflation was low during this time and then the inflation rose quite sharply and it became one of the highest inflation period in the US economy and also on the world. Again, something very similar is happening in the year 2020-2021 that inflation became really high in the US economy and then it transpired all across the world. Now, why did this happen? Because here the black line, it's a trailing line. So what happened here was that the liquidity or the increase in money supply in the economy rose quite fast. So first the increase in liquidity happened and as a result the inflation went up. Now something very similar is happening. Forget about this time period. Just imagine this to be 2021 and 2023 type of period. So again something similar has happened. That inflation has peaked. This is what Micheal Burry said and he also said that hey, inflation is going to be really low in the second half of 2023. So inflation is likely to fall like this. Second key point that what is going to happen is that hey, the government money printing will start like this. So if government money printing starts like this is your money making opportunity. So if you simply go and invest in good assets, you are going to make a killing. Now, why does that happen? It is very simple that whenever money printing period starts, this is a money printing period, this is a money printing period, this is a money printing period, this is a money printing period. Whenever this black line spikes, right? So this rate of growth is very, very high. there is something called as asset appreciation. So everything will go up in value. The final part to that tweet by Micheal Burry is very simple. So this is a cycle. So what does a cycle look like? So cycle looks something like this, that this is a cycle, right, for money printing, and this is a cycle for inflation. So now you need to be a sensible investor. You should not be investing money in bulk. You should invest money in phases where it supports you. So what is that phase where you will be making returns? It's very simple. So you will be making returns when the money printing or the money printer starts. So these are the type of phases that you should look at, and you should pour in a lot more money in these periods. And whenever the liquidity is withdrawn from the market, so these phases, you should not be investing crazy amount. Therefore, I had said even last year that hey, markets are going to be volatile in the year 2023, and that is how it is exhibiting, at least in the first month, and it is very likely that this trend is going to continue in 2023. So this is not an SIP type of a market. Now, what stocks am I buying? What stocks am I selling? I give that entire commentary on the community member section and Wisdom Hatch community. You can check the links in the description box to join it. In case you are a complete beginner and you do not know where to invest, so right now I am taking positions in US stocks. For that, you can go and check Vested. And also, I'm taking positions in the Indian market, and I'm taking a lot of positions in small cap, mid cap stocks. And for that, you can check some of my small cases. So my key takeaway from Dr. Burry's tweet is very simple, that you need to time the market, and a good time is coming. Now comes the second piece of commentary, which comes from Dr. Rajan. So here is a link to that entire LinkedIn post, and this is a 4-page short summary that he has posted. You can go and feel free to read it. A lot of insightful stuff. And there are 3-4 critical points that he has stated. So first key critical point that he has spoken about is that hey, the entire world is suffering due to the economic recession that is going on, and India is no exception, but the recovery path for every country might look different. Now, India's recovery path can be understood from a K-shaped recovery. So a K-shaped recovery looks something like this. So this is okay, right? This is this, and this is this. So this is what a K-shaped recovery looks like. Now, what in simple economic terms it means is there are certain segments of the economy that will recover, and then there are certain segments of the economy that will not recover at all. In fact, they will go down in value. Now, this can be understood at an industrial level also, that hey, some of the industries, for example, finance, for example, tech might recover. I'm not saying 100% recover, but these are industries that might recover. But on the flip side, certain other industries, for example, metals or PSU banks might not do well. I'm just using these industries as an example to explain what K-shaped recovery is. Please don't take it as a stock buying selling recommendation. Now, this can also be understood from a society level debate. For example, Dr. Rajan is currently saying that, you know what, the rich-poor divide in India is getting wider by the day. And this can be seen from the type of purchase decisions that we are making. So just to explain that, let me take you back to Dr. Rajan's paper and let me cull out a specific paragraph. So this is a very important paragraph, and basically what he says is that in the period 2018 to 2022, there has been a decline of 36% for two-wheeler sales. Now, if you study the rich section of the society in 2022 alone, Mercedes-Benz, which is a luxury car, it has done approximately 64% more sales. So what does this dichotomy show? So the word of the day today is dichotomy. Let me know what does that mean. So in simple terms, it says that, you know what, that rich are getting richer and poor people are getting poorer. Now this is also translating into stock markets. For example, you would have seen that consumer durables has given bad returns. Similarly, two-wheeler companies have given bad returns. Non-luxury car companies, for example, Maruti has given really poor 4-5 year returns. So to cut the long story short, companies that are targeting the lower strata of the society that are suffering and are likely to suffer, but the companies that cater to high-end society, they are likely to benefit. So you let me know in the comment box, number one, that do you agree with this commentary, that is this seriously happening in India or not? Number two, that if you do agree with this viewpoint, then what type of companies will you be buying and will you be avoiding? I will present my answer in the community section in tomorrow's discussion. Now with that said, let us move on to the third piece of the commentary and let us quickly understand what Mr. Satya Nadella has to say about the current state of the economy, where Indian tech sector is going, and what are the growth areas of tech. Now I will watch some snippets of this interview with you. Again, I will put the links in the description box. You can go and check it out, but I will simplify the entire interview in case you are new to tech and if you don't want to see the entire point, and I will relate it to the stock markets.
About India.
Number one, he is saying that, hey, the software development market in India is already quite big. Second, even the AI market is going to become really, really big, and Indians are well educated to take advantage of this evolving trend, which centers around artificial intelligence. Now, very quickly breaking down what artificial intelligence is. this? It simply means that, for example, we as humans have a brain, right? So we observe things, we learn things on our own, we feed data from the real world, that we'll go to a park, we'll observe like 5 trees, we'll learn about those trees, and that sticks to our memory. So what are we doing? This is our intelligence. Now, similarly, machines can also learn, and that is artificial in nature because that is not natural, right? Humans made it. So that process of machines learning themselves, that is called as artificial intelligence. I'm giving you a simplified understanding. So Mr. Satya Nadella is extremely bullish about AI, and he says India is the biggest market when it comes to AI. I agree from an economics point of view, but I disagree from a stock investing point of view. So you tell me in the comment box which 3 AI companies or which 3 companies in India are focusing a lot on AI and can compete with global giants. The answer would be 0. I don't think that any major company in India is trying to compete with the likes of Microsoft, Google, Amazon, all these companies. And from a stock investing viewpoint, if you are bullish about AI, there are very limited opportunities in India right now. And it is very unlikely that at least for a foreseeable future, India will become a prominent hub from a stock market perspective when it comes to AI. But yes, Indian engineers are well educated and we as a country are poised to benefit from the AI revolution. Second, he spoke about recession and inflation scenario. So let me make a piece of commentary and let me break it down in simple terms. Number one, he says that, short-term economy, I'm not saying stock markets, economy, short-term, it is messed up, right? So this is what he's saying, and we are preparing for it as a company. So what we are doing is we are figuring out our cash positions, preparing for recession. And this is one of the key reasons why so much firing has already happened in tech. Because from an economy point of view, all these major tech companies understand that, hey, the massive growth period is likely not there, at least for the next 2 years. And then after 2 years, once there is slightly more bullish sentiment, generally speaking, majority of the supply chain problems, demand problems, supply problems has been solved, that is when we will jump in and figure out our next layer of growth. This is from an economics side. Does that impact the stock market? So the short answer is yes and no. It impacts the stock market because stock market is a forward-looking creature. It tries to estimate what is going to happen 6 months from now. So tech demolition in the stock market is already complete to a very large extent, according to me. This entire fear that not much growth is going to happen for the next 2 years, it has been factored into tech stocks. Their valuation has already corrected. A few days back, I had made a video on Tesla. Please go and watch it. I had categorically pointed out that Tesla this year has corrected by 70%. Now, it's not as if that entire Tesla will just vanish from Earth and it will go to zero. No, nothing like that is happening. Now, in that spirit, what I am personally doing is that I am building more positions in NASDAQ. It is currently trading at a discount of 25-30%. So according to me, it's a good time to buy these assets. It does not mean that you are going to see immediate return next month itself. Yes, the recovery will take time, but that 25-30% recovery will definitely happen. Now, the third key viewpoint expressed by Mr. Nadella was around the tech outlook and how tech industry is going to shape up. So let me play a couple of clips and then I will give you my comment.
Consume more tech info.
So this is a very important point and a very pertinent point. So what he is simply saying is that, see, everything around us is getting digitized. Even companies that have nothing to do directly with tech are adopting tech. A classic case in point would be the real estate industry. That real estate, does it require any tech? One could argue, no. Hey, you just buy land, you construct, you sell. But for selling also, for constructing also, so much optimization is going on, so much work is done by adopting tech. So tech jobs are going to go up. They are not going to go down. Second, he spoke about the tech correction that has happened. So let us very quickly listen to that point, because there has been so much negative commentary given about tech stocks right now that, tech is just gone. Every company is falling by like 50%, this, that. But please remember that all these companies are fairly big. They can evolve. They have the cash with them. They have the R&D expertise with them. They have the hiring power with them. And they have enough research money to figure out where the next layer of growth is going to come. And my personal perspective is that at least for the next 1 decade, all these tech giants, they are not getting disrupted. They are going to do fabulously well in the stock market, and I'm building my positions in it. But yes, please don't confuse this with Indian tech. Indian tech is very, very different. For example, when I say tech, I do not mean tech like TCS in traditional sense. I mean tech in Microsoft, Google sense. Now let me play the final clip as to where Mr. Satya Nadella sees the growth coming in tech, and why you will have a very clear central theme that, Mr. Nadella is extremely bullish on AI. This is where he sees, as the CEO of a Fortune 500 company and probably one of the best tech companies on earth, that he is betting big on AI. Is Facebook Meta doing the same? One could argue yes. Is Google doing the same? Yes. A lot of talk has happened about Chat GPT. In case you don't know what that is, there is a short that I have done. I will link it in the comment box. You can go and watch it. So all these new stuff that is coming up, it is going to define the future of tech. Tech changes almost every 5 years substantially. And the next layer of growth that is going to come, where these companies are going to make crazy amount of money, That is the race for establishing their supremacy in AI. Whichever company does that, it is going to disrupt a series of different industries, and all these 4 or 5 players are working quite aggressively. Which company will win? We don't know, and neither we should bet. What I will simply do is that, hey, I'm going to buy something like Nasdaq because some major tech company is going to win. Even if other 4 companies do not give me massive return, one of the companies that is going to win this AI race, it is going to generate crazy amount of money for at least a decade. And that is how you can identify multi-baggers. I hope you enjoyed this conversation. Before winding up, let me present a very quick summary that even Mr. Micheal Burry is not negative about the market. That is what I could understand. Mr. Rajan says very clearly that, hey, there is going to be a K-shaped recovery in India. It would allow us, if you understand this point more, to take the right bets in the Indian market. And third is regarding tech and future of tech. It is very bullish. You have to be long about tech. You can't be negative about tech. That finally, don't try to identify too many tech winners. Go with the established firms because one of them will definitely win the race. Thank you so much for watching, and I'll see you the next time.